According to Jim Cramer, a financial commentator and host of CNBC's Mad Money, the Federal Reserve's handling of the collapse of Silicon Valley Bank, SVB, has had a positive impact on the stock market. Regulators shut down SVB after depositors withdrew billions of dollars practically overnight. Cramer said that the Fed had been focused on fighting inflation, but had to quickly shift its attention to the instant financial crisis caused by SVB. Despite the crisis, Cramer argues that the SVB failure has actually broken positive for the stock market. He believes that investors have turned to the Wall Street playbook on what to buy when there's an economic slowdown without inflation: tech stocks. He suggests that the tech sector is the go-to sector in a slowdown because companies like Apple, Meta, and Nvidia are brimming with cash and don't need to tap into the equity or bond markets. He also points to stocks like Caterpillar and Illinois Tool Works because investors assume they will experience a slowdown in orders. Cramer notes that the Silicon Valley Bank fiasco was just the oxygen the tech bull needed to snap out of its funk and get back to work. The collapse of SVB is not the first time that a financial crisis has led to a shift in market trends. During the 2008 financial crisis, the real estate market collapsed, and banks were forced to write down trillions of dollars in bad loans. This crisis led to a shift in the market towards more defensive stocks. Similarly, the 2020 pandemic led to a shift in the market towards tech stocks, which benefited from the shift towards remote work. While Cramer's argument seems compelling, it is important to consider the risks associated with investing in the stock market. Investing always carries a degree of risk, and it's important to consider your own financial situation and risk tolerance before investing in any stock or sector. Additionally, it's worth noting that the stock market is not a reflection of the economy as a whole. The stock market can rise even as the economy is struggling, or it can fall even as the economy is growing. Therefore, it's important to not rely solely on the stock market as a measure of the overall health of the economy. In conclusion, the collapse of Silicon Valley Bank has had a positive impact on the stock market, according to Jim Cramer. The Federal Reserve's quick action to address the crisis has helped to restore investor confidence, and investors have turned to the tech sector in the absence of inflation. However, it's important to keep in mind the risks associated with investing in the stock market and to not rely solely on the stock market as a measure of the overall health of the economy. Bankworld News. There are many followers who rely on content to stay informed and make informed decisions about their financial future. From breaking news to expert interviews and in-depth analysis, this channel provides its viewers with everything they need to stay abreast of the latest trends and developments in the world of business. With a commitment to accuracy and impartiality, Bankworld News has become a resource for anyone who wants to stay informed about the latest developments in the world of business and finance. Whether you're an entrepreneur, an investor, or just someone who wants to stay informed, Bankworld News is the YouTube channel for you. Don't forget to press follow, like, share and support monthly members to receive updates before anyone else. Thank you. Bank of America. Money. Bank. Silicon Valley Bank. World. News. Breaking news. World news.